Good morning, and welcome everybody to the pre-market prep session for May 16th, 2023. This being our daily session where we go over any and all information necessary to keeping you consistently profitable here across these crazy markets. I'm your host, Adam Holland, stock options expert, as well as expert market strategist, and we're here to dive into what it will, be, what it takes, what's necessary to be consistently profitable this week. We have another week on our hands where you really want to be sized down, right? It's OPEX week, so we have a ton of option contracts expiring this week. We've got this whole debt ceiling issue that's going on. So we've got a lot of different things, right, that are kind of on the table, that point to this week not being a week of, you going heavy or a week of extreme movement. We've really had to deal with consolidation, right? A range inside of a range inside of a range for the past month and a half, 2 months. It is not fun, right? It is not easy, but again, tough times don't last, tough people do. So it's just recognizing how to navigate during these times, right? And executing. The market isn't like this forever, but it does have times when it is like this, right? If you look back, go on the weekly chart, right? There are a number of points where you just see candle, 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 right next to each other, and the market is basically going nowhere. So those times aren't fun, but we do have to live through them, and you still have to know how to navigate them. And those are the most important times, actually, to know how to navigate. So that's kind of what we're, kind of doing now and navigating through. And in terms of this week and what we have, on the docket, it seems like we can get another week, maybe 2 weeks of this chop. We're kind of funneling, right? We're kind of squeezing into something where hopefully we pop. Whether it happens today, I don't know. It could, go on for the rest of this week. And then ultimately, if we get some type of decision, can we lock in camera? If we get some type of decision regarding the debt ceiling, right, then we can get a move, in one direction or the other. But overall, right now, it's all about managing, making sure that you're sizing correctly and making the correct decisions with the correct amount of risk. Let's see, camera, can we lock in? I don't know why. I think it might be the contrast of me having myself on the screen, and then the camera also, but it normally isn't grainy for this long. All right, let's get it together. Anyways, good morning, everybody who's popping in, right, who's watching. As always, make sure you're dropping drop that one in the chat. What are we doing that for? That's to signify your intention to get 1% better by the end of the session. That's all we're looking to do. Get incrementally better, right? Add this to your repertoire, add that to your repertoire. And then when we're under, the 99% time frame of how markets act, any other time, you're good, right? You're executing. So it's important, to recognize, like, okay, for now, we're gathering those little bits of information. We're trying to get 1% better. And focusing on that 1% is super important during times like this, during price action like this, right? What am I gleaning? What information am I getting? If you base your day only off of how much money that you made, you're not going to have longevity in this game, right? Because it's about you taking in little bits of information. Let me watch this video that Adam dropped. Let me watch this analysis. How is he thinking about that? How's he going about that, right? And then you adding those little pieces is what allows you to flourish when the market starts moving normally again, moving with direction, moving with conviction. People think, oh, the market's chopping. I'm not really going to pay attention to what's going on. Well, then you're going to also struggle with the little things when the market is moving, right? Because those things keep it tight when we start to get movement, right? You don't win championships during games, you win it during practice, right? You win it during practice, you win it before, you win it during the times of preparation. So make sure that you, heavily invest during the times of preparation, right? Invest in yourself. So then when it is time, right, and the market is moving and the money is coming easily, and you're like, why isn't the money coming easily to me? Did you double down during the time when blood was in the streets, right? It's not just about buying stocks on the dip, right? Or investing in yourself, when other people are fearful, investing in the market when other people are fearful. It's investing in yourself when other people are fearful. When people are like, hey, you know what? This thing is done. I'm going to go ahead and focus on something else. That's exactly when you should have been doubling down, right, on that, because that is what separates the men from the boys, right? The women from the girls, the grown-ups from the kids, is what you're doing when times aren't easy, right? Because then when times get easy, what are you doing? Executing like clockwork, because you were like, hey, I was trading through this crap. So now that we're in a normal market, I'm executing like a big boss. And that's what you want to be focused on, right? And that's also what we're focusing on when we have this upcoming 3-day technical analysis boot camp for the Chart with Confidence Challenge. So make sure that you're signed up for that. I know a lot of you guys are, but if you aren't, make sure you get in there. You get in, you're available for that. Early bird going on right now. So take advantage of that opportunity, because if you struggle charting, if you struggle identifying chart patterns, if you struggle drawing trend lines, all of that stuff, this is that time where instead of going ahead and paying the price for a one-on-one where a lot of people normally go over these things, you get to go through and have access for a third of that one-on-one price, right? So that is very, very important. When you think about it like that, you're like, oh, this might be something worth checking out, right? Because instead of having to go, and have that time with me, we have 3 days where we go through, we're doing nothing but charting. We go through, we do an exercise, everyone charts it. We go through, how does your chart look? Pull it up, show me. And I don't even care if you don't want to show your name, you can put a nickname up, right? But how does your chart look? Pull it up, show me. Okay, here, this is where you want to tighten up at. This is the high that you want to target, right? This is how you want to go about this. Getting those reps in, right? Detree said signed up. Yeah, getting those reps in, because that is where you distill those experiences. You can go through hours of staring at charts and you thinking, okay, maybe I'm charting this right, maybe I'm not. Or you can go through 3 days of me telling you, yes, you're charting this correctly, or you're not charting this correctly, or this is how you want to go about this, or this is how you want to go about that, right? That is where you kind of put yourself into that pressure cooker, right? Where you're like, okay, now I've distilled thousands, right? Hundreds of days of me evaluating price action myself and having no one to let you know if it's correct, right? You distill that into a few days, and that jump starts you, pushes you forward, accelerates you forward in a way that you doing yourself would take a lot more time. So I like to put out resources and make things available that can collapse time for people. This is one of those resources, right? Otherwise, you can kind of sit there hoping that you've charted correctly time after time after time. And what's even worse is if you do win sometimes when you've charted incorrectly, that is a hard pattern to break, right? That's a hard pattern to break. So especially when you're just starting out, you're getting that foundation. If you don't know if what you're doing is correct or not, you could build the wrong foundation. It is a lot tougher. Ask anybody who's in construction, in contracting, in real estate. It's a lot tougher when what you built has an incorrect foundation than you starting from scratch and building the correct way. So make sure you're putting in the time to build the correct way. And if you haven't yet, you already know that link is at the link in bio on my Instagram or chartwithconfidence.com. Now, in terms of what we got going on today, we got a couple of fun headlines, right? A couple of, not so fun headlines, but overall, we can go ahead and dive into it because our top news is 13F season. So it's that time of the quarter again when hedge funds with at least $100 million in assets under management disclose their holdings. The flurry of filings gives investors a chance to see what they bought and sold during Q1, like long positions and call and put options. Those shorts aren't included in the statements. Besides detailing where the smart money is being put to work, some may seek out vulnerabilities they can profit from, though hedge funds usually wait until the last minute to publish their holdings so as to not let the public know what they are doing. Now, as always, it's very important to put out my, regular disclaimer that I put out during 13F season. Just because you can see what the big boys are doing does not mean you can see the totality of their plan, right? People say, oh, Warren Buffett bought this. Warren Buffett sold this. You don't know what his option positions are, right? You don't know what his full game plan is. So that's like, you see me going to the grocery store yesterday, right? I went to one grocery store. They had a few things I had. They didn't have everything that I needed. If you only saw what I got at one grocery store, you might have been completely incorrect about what I was making, right? In terms of my recipe. So I can go into a grocery store and I can get, chicken broth and rice and, carrots. And you're like, oh, he's probably making chicken noodle soup. But then, I end up going to another place and I get a bunch of seafood and all this other stuff. And it's like, oh, he's making jambalaya, right? I don't know if carrots go in jambalaya, but you get what I'm saying, where it's like, you only see a portion of the picture. So you seeing, oh, someone bought this position or someone sold this position, we're talking about billions of dollars that they have under management. So if I sell $5 million of this stock, like you don't really know what the full picture is of that, right? If I buy 10 million of this stock, right, that could be a hedge when I have 30 million in puts, right? So it's like, there are a number of different things that could be at play here, and you don't see the full picture. So don't ever look at 13F filings and say, okay, this is what I need to do based off of what the smart money is doing. Because number one, smart money isn't always very smart. Number two, you don't always know, and the majority of the time you don't know what the full picture is, right? So we can't say, oh, I saw this person pick up 2 ingredients and say, oh, this is what they're likely to make. you could put those ingredients into hundreds of recipes, right? So it's the same thing when we talk about 13F season. So throw a 3 in the chat if that makes sense, right? About not trying to extrapolate too much from 13F season. Now, in terms of diving in deeper on what we see going on here, big bets on AI. Stanley Druckenmiller's Duquesne and David Tepper's Appaloosa showed sizable positions in stocks benefiting from the artificial intelligence boom, such as AI-focused Microsoft, as well as NVIDIA, which is up over 100% year to date. Other bets centered around Google parent Alphabet, healthcare company IQVIA, whose ticker is IQV, and Cathie Wood's ARK Innovation ETF, ticker ARKK. Now, Bill Ackman's Pershing Square and Daniel Lieb's Third Point also up their stakes in Alphabet, which hastily released a chatbot called Bard in March after Microsoft poured billions of dollars into ChatGPT maker OpenAI. Now, I actually had a friend who tried out Bard. I haven't tried out Bard recently after that kind of discombobulated drop they had earlier. But apparently Bard, is a lot better, right? It's a lot better now, and it has up-to-date information as opposed to ChatGPT, which does not have up-to-date information. Now, as I said before, they likely have multiple iterations of ChatGPT right now. And if I had to guess, they also already recognize that them having up-to-date info is very important. So I feel like that's something that they probably already taken care of, to be honest, but they just want to do what every big tech company does in America, and that's give us the minimum viable product, drip it out over years and years because they know we're going to pay thousands of dollars for it. And, then they'll unveil what they had in 2023. They'll unveil that in 2030, right? That's just how it goes. The iPhone 20 is already made, right? All these different things is already made, and they get released much earlier in other countries, right? China, India, all these other countries get technology before we do. Why? Because they won't pay for the crusty little iPhone 10, iPhone 11 changes, iPhone 12, whatever, right? They won't pay for them. They won't pay what we'll pay for them, but we will pay for them in America, right? Because we love to stunt, we love to portray an image, all that great stuff, right? So what happens is we get all of our tech a lot slower. It debuts overseas and they have larger changes model to model because they know people straight up will not buy the new models if they don't have major changes. We can't do that in America, right? We can't put our foot down. But that's, it's one of the reasons why it takes tech so long over here to really come out, is because people won't collectively put their foot down and not pay $1,000 more bucks for an iPhone that added one more camera on the back, right? Now let's see here. Investors additionally eyed the new positions of Warren Buffett, who is well known for being a value investor. Berkshire Hathaway took new stakes in Capital One Financial, ticker COF, an alcoholic beverage maker, Diageo, I think it's pronounced, but their ticker is DEO, while divesting 4 other stocks, including Taiwanese chip maker TSMC, whose ticker is TSM. We already talked about that, and furniture retailer RH. Oracle of Omaha also upped stakes in Apple and Occidental Petroleum, but reduced holdings in Chevron and several others. Chevron's ticker is CVX. In terms of Apple, the stake that he bought in Apple is also just equivalent to the money that he made via Apple dividends. So again, very important to recognize what you're looking at when you look at the 13F resources, right? When you look at the 13F filings, it's not just, hey, we've got, Warren Buffett bought some more Apple. Time for me to buy some Apple. He reinvested his dividends, right? Which means that what he made from owning Apple in dividends, he just put back into Apple. So he didn't really take his own money, right? His own fresh capital and say, I'm going to put this into Apple. He took Apple's money that Apple gave him and put it back into Apple because he's the Oracle of Omaha and he doesn't need Apple's dividend payments. Now, let's see here. What else we got going on? Fine print. While the transactions can be helpful, it's important to remember that 13Fs don't tell the whole story about what hedge funds are doing. As noted above, bearish bets like short selling are not included in the statement. So visible long core holdings could actually be hedges against those positions. In some instances, the reports can also reflect investment decisions made several months ago, since they are only filed up to 45 days after the quarter is complete. So, pretty much just the same disclaimer that I gave earlier. Shifting to financials now, we've got a relief rally. Regional bank stocks got some rare love on Monday as traders gave some confidence to a sector that has been under pressure since March. PacWest, ticker PACW, rose 18% after falling 21% last week, while other regionals like Zion's Bank Corporation and Comerica, Zion, their ticker is Zion, and then Comerica, their ticker is CMA. were among the biggest gainers in the S&P 500. Some pressure may be dissipating as the market participants shift their focus toward the debt ceiling debate, while a new 13F filing showed that Michael Burry took stakes in bank stocks like PacWest, ticker PACW, and First Republic. Former Silicon Valley Bank CEO Greg Becker will also apologize for the Senate Banking Committee later today, but will reiterate that any bank could not have, quote, survived a run of that velocity and magnitude. It is true, and that's why they're thinking about kind of stopping the ability to short these bank stocks because, the creation of fear around these bank stocks literally can cause them to crash. So, I mean, yes, there's mismanagement involved. Silicon Valley Bank, the CEO's like, nobody could have survived this. Well, you also could have made better investment decisions with your money. Let's not act like you're completely absolved of guilt because you were doing dumb stuff that you should not have been doing, right? During times of economic downturn, and you had to pay the price for it, right? It's not like you lost money, the money evaporated, right? You were paid to take care of people's money and you did not do that, right? And that's why it's such a big mantelpiece to hold and such a big cross to bear. If you put yourself in charge of people's money and you say that you can handle it, you need to be able to handle it. If you can't, you don't need to be running a bank. It's as simple as that. Now, in terms of tech news here, Reality Pro anticipation is building for Apple's new mixed reality headset, which is highly likely to be announced at the company's developer conference next month. Pricing for the device, which is expected to incorporate both virtual and augmented reality, has not yet been revealed, but industry watchers are expecting the headset to cost around $3,000. No surprise here. It will reportedly be released in an experimental mode and comes with an external battery pack, concessions that Apple had to make as the market is already full of competitors, and it would take too much time to release a production version. Back in February, Apple was said to have delayed the announcement of the long-awaited device from April to June because of, quote, lingering issues with the development of the product. So the Apple Reality Pro headset, everybody's super, super hyped about that. In terms of trading investor days, a lot of people think, Apple stock is going to run during, this product day where they announce new products. That's not often the case, right? A lot of times there's hype leading up to the event and then Apple sells the day of the event. So that's a very important trade nugget to understand, right? Because a lot of people are like, Apple's new Reality Pro headset, got to get those Apple calls going into the event. No, leading up to the event, maybe. But the day of the event, normally Apple sells, right? And if you do get any type of spikes, it's like a 1 minute, 2 minute spike, and then we're right back to normal. In terms of, my thoughts on the product, I've got to wait to see. I've heard good reviews, but also it's Apple, right? One of the most wealthy companies in the world. They can pay for great reviews. I did see that it's going to be priced at $3K initially, and then in a few years, they'll take it down to around $1K. And then that's also what it's going to sell at in other countries. So will I be one of the first people hopping on the Apple Reality Pro headset wave? Probably not, but they will have tons of people that will do it. Just know that if you wait a few years where you'll get a better product, right, and less bugs, you can get it for a third of the price. So I'm completely fine with that because I like to create my own better reality as opposed to escaping to a virtual one, right? I feel like that's what we want to be focused on. Throw a 7 in the chat if you agree. I'm focused on making sure that I am shaping and creating my own better reality, not trying to run off and join a virtual one, right? Where that's just another form of escapism. So I'm sure that there, will be great tools that it's used for. But at the end of the day, I want my reality to be what I can touch. I want that to be where my focus is. In terms of economic news, 17 trillion and counting. With inflation continuing to outpace consumers' wage increases, it's no surprise that their levels of debt are rising. According to the Federal Reserve Bank of New York, total U.S. household debt rose by 0.9% to 17.05 trillion, with balances standing at 2.9 trillion higher at the end of 2019 before the pandemic recession. See the full breakdown covering categories like mortgage balances, credit cards, auto loans, and student debt. The report comes on the heels of last week's Consumer Sentiment Index that showed people are feeling less optimistic about their current situation and their expectations. While Seeking Alpha analyst Wolf Richter writes that despite Fed tightening and bank collapses, it's still, quote, an astoundingly loose financial situation. Now, in terms of today's markets, we got kind of a mixed bag here. In Asia, Japan, we're up 0.7%. Hong Kong, we're flat. China, we're down 0.6%. India, down 0.7%. The footy in London up 0.1, basically flat. Paris is flat. Frankfurt is up 0.1. The Dow down 0.3%. S&P down 0.2. NASDAQ flat. Crude down 0.3. Gold down 0.4. Bitcoin down 1.1% to basically 27K. In terms of today's economic calendar, we've got Mester, who spoke already at 8:15. Got retail sales at 8:30 a.m. Bostic speaking now around 8:55, who's another member of the Fed. But not too much, kind of craziness in terms of, the economic calendar. We got, a few more Fed statements. Williams talks around noon. So we can get some chop, right? We've got Fed members speaking. We're also kind of stuck in this kind of full funnel. What am I trying to say? Kind of like a funnel, right? Like a reverse megaphone where we're squeezing, right? On SPY, we're squeezing like this. We're getting tighter and tighter and tighter. And I'll go in and show that, chart in the Facebook group where we're really kind of squeezing on SPY. So hopefully we get a pop. Do we get that pop today? I have absolutely no idea, right? There's no reason the market owes us a pop or a drop today, but we'll see. If not, we can also just make plays within that range. But we're not looking like we're going to get any explosive move. We can if we get, if we lose, what area is this? Like around 411.67-ish, 411.55, right? It's a line that's moving up. So that level changes over the course of the day. But right now it's right around like 411.53 at open, right, to the downside, and then around 413.15 to the upside. It's like, let me see here. We can dive in a little bit deeper. Yeah, so actually more 411.18 to the downside, 411.20. 411.20 to the downside, right? If we lose that, we can continue lower. To the upside, it's around 413.40. So roughly 411 and 413, right? We can get squeezed in between 411 and 413 over the course of this day. So we can bounce back and forth between the two. You can play it, calls at the bottom, puts at the top, right? Or if we break through, to the upside, you can grab calls. If we break through to the downside, you can grab puts. But overall, right, it's looking like another day where you want to make sure you're not sizing large, right? You're not sizing large. We're getting a lot of chop. We've got this whole debt ceiling, no pun intended, hanging over us, right? We've got this debt ceiling issue hanging over us. And that could have contributed to, some of the uncertainty we've seen in the past few weeks, past few months. With the market chopping like it has been, some of this erratic behavior. So hopefully they get that squared away, right? And that might be the impetus or the driving force that gets us back to movement with conviction. Because I think right now, the market is struggling for direction, and it might be waiting on this debt ceiling issue in order to finally get some direction. But yeah, those are going to be the levels that we're looking at, really around a little above 411 and then a little above 413. That's where we're getting squeezed between, so we can ping pong back and forth between those areas. Let's see here what else we got going on in terms of closing up here. We've got our rapid fire bullet point rundown to finish up. So results on whether the SEC should ban short selling bank stocks. I guess they took a survey. Wells Fargo, if I had to guess on the results of the survey, people probably said no because they wanted the ability to do what they want, right? Wells Fargo, ticker WFC, reaches $1 billion settlement over scandal recovery. Wells Fargo, man, always scamming somebody, always involved in some scandal and paying people outside of court. Ford, ticker F, rethinks strategy in China with job cuts and leaner operations. Microsoft's $69 billion purchase of Activision gets EU approval. Vodafone, ticker VOD, to slash 11,000 new jobs as CEO plans turnaround. Report Western Digital, ticker WDC, gains as talks with Kioxia speed up. Airline bookings in the U.S. show signs of cracking in latest data read. And then Elon Musk still needs a Twitter sitter for Tesla-related tweets. Horizon Therapeutics, ticker HZNP, sinks on fears of blocked Amgen deal. Debt ceiling crisis has already increased Treasury's borrowing costs substantially. So that will wrap us up, put a bow on it, and take us out for the pre-market prep session of May. I keep wanting to say April, May 16th, 2023. As always, if you got any little piece of value from this session, just show love to the different content that's posted to these accounts, right? This is all put out for the free to benefit you guys, to make sure that we're continuously in an environment of leveling up, moving forward, and getting 1% better. So I'm glad to have you guys along for the ride. Make sure, if you haven't, that you've registered for the Chart with Confidence 3-day technical analysis boot camp, because we're going to absolutely get it in. If you know people involved in markets, send them the link, shoot them over the link, tell them to get involved. Because again, right, we have these at a very, very important time, right? The dates for these are specifically chosen, right, for the reason of what we're expecting in markets. So if you look at when we had the cutting edge challenge, when we had the last challenge, right, all of these challenges coincided with being right before major movement that we saw in markets. So this is your last second boot camp before you get dropped into the war zone, right? So this is that preparation. This is that what goes into it, right? So that when the war starts, when it's time for you to get out there and execute, you're ready to do exactly that. So I appreciate all you guys for popping in, investing in yourself. I'm sure your future self will appreciate it as well. Have a great rest of the day. I'll see you back here tomorrow morning. You know the deal. I was about to say the drill or the deal. You know the deal, DILL. We're back here tomorrow morning for our pre-market prep session. Knock it out today. I'll see you there for that. Have a great rest of the day. Peace.